The other key section of a gap analysis is to ascertain if there are inconsistencies between an organisation's strategy and an analysis of its internal environment. We consider aspects like stakeholders, strategic drivers, operational performance and capabilities. You can only get an accurate picture of an internal environment gap analysis if you were there, in that organisation. So we will take some liberty with our high-level view of Origin. But the questions we raise here will be similar to ones that Origin or other companies in the Australian energy industry will be asking themselves. Stakeholder gaps are becoming increasingly important to address for energy companies because their two biggest stakeholders, government and customers, both have diverging wants and needs to Origin, perhaps more now than in the past. Origin's customers want cheaper power in a market that has seen skyrocketing prices. They are more price sensitive than in the past. Origin's strategy is to charge a price that customers are willing to pay, but if they push too high, customers may move to other retailers or to substitute off-grid solutions. The Australian government wants to see investment in energy infrastructure, non-renewable and renewable energy forms. Coal and gas processing and energy generation have delivered jobs and therefore votes to both major political parties for many years, so they have been a supporter of companies like Origin. However, increased coverage of climate change events such as drought, floods and fires is shifting public sentiment and forcing political parties to slowly move away from supporting non-renewable energy to be stronger supporters of the renewable energy sector. Shareholders expect Origin to generate strong share dividends and capital growth through the assets they operate, which are mostly non-renewable energy forms that increase greenhouse gas emissions. There are different and complex inconsistencies between different stakeholder wants and Origin's strategies. Origin should understand their strategic drivers. They know which markets and segments they operate in and what their products are and who their customers are. They have different channel options for their retail business, but their power generation business is more set due to its utility nature. To know if they are achieving the maximum competitive advantage over industry rivals, Origin will look for inconsistencies against their strategic drivers. The types of questions they might ask themselves include: how much do we need to focus on renewable energy products? Should we invest more heavily to develop new products like battery storage? How likely are our customers to move from Origin due to our retail plans being less attractive than competitors? Are we reaching out to new customers who have more sustainable views on energy consumption, and is our offering compelling? Are we utilising the right mix of channels to reach our customers and get the highest penetration for our marketing campaigns? None of these questions have yes or no answers, but will form part of a detailed gap analysis of the strategic drivers. When analysing operational gaps, you focus on an organisation's performance against the stated strategy. If the company has committed to cost reduction, did they achieve their targets? Did Origin expect to increase gas production or to increase customer lifecycle revenue in their retail markets? How did they perform against their stated strategy? With a company this size, financial commitments to developing new assets and maintaining current ones must be done well in advance. Origin split their capital investment at a high level into mandatory, sustained, committed growth and new growth projects. The potential operational gap here may arise from fixed budget allocation to capital-intensive assets, such as gas-fired power plants and gas processing. A fast-changing external environment towards renewables could see return forecasts more challenging on non-renewable assets that were designed to operate for 40 years. Other different performance indicators that Origin might use include operating budgets, electrical power plant utilisation, processing cost comparisons against competitors such as US shale gas producers. There is an interesting operation gap developing in the energy retail segment. Government reviews have recommended changes to how retail power is marketed and sold to customers. All industry competitors must improve how they present plans and options to customers with an expected outcome of less complexity and lower power bills for consumers. The last area of gap analysis in the internal environment focuses on capability gaps. Origin will have a wide range of capabilities. However, are those different capabilities in the right areas of the business and are able to deliver growth outcomes? The growth of renewables in areas such as solar and wind energy means that Origin needs to consider if they have the capabilities in research and development, sales, marketing, distribution and service for this market segment. For instance, they acquire a company that installs wind turbines as part of a strategy to double their wind energy sales. Will they be retaining the bought company's key personnel? If half the personnel of the acquired company decide not to work for Origin, will this create a capability gap in wind turbine installation? Acquisitions and mergers are one area that often brings capability gaps into focus. This is because a company often immediately increases its operations or commences business in a new segment. The company is not certain what capabilities will come in the acquisition and what it will need to get from elsewhere quickly. Remember also that capabilities can be more than just technical skills. Does Origin have the finances to invest in new energy infrastructure? Do they have the manufacturing resources to build solar panels or wind farms if they wanted to? To recap, completing a gap analysis against the internal environment involves utilising tools like stakeholder maps, strategic drivers, strategic capabilities and performance measurement. The analysis takes the strategies of a company and looks for inconsistencies against those internal analysis frameworks. Like the external gap analysis, the different areas of analysis are interrelated and require us to consider them both individually but also broadly to get an accurate picture of gaps that an organisation can address.